All right, what's going on, everyone? Give me a little shout out. Let's see who's in here, and let me know if you can see my screen here and hear me okay. Thanks, everyone, for bearing with me as I've had the computer issues. I'm back to normal now. Outside of, I've had a little bit of trouble with Zoom, so I'm actually going to shut off the camera. It gets better when I shut this thing off. So hopefully, we don't have any connection issues. Jason's saying no sound. Anyone else having issues with sound? Otherwise, it might be an issue with you, Jason. Okay, looks like you guys can hear me. All right. Uh, Someone let Jason know it's probably an issue with his setup. But all right, good turnout today. Happy Fed Day. And this one looks like, I say this every time, but it looks like today might actually be a happy Fed Day. So we'll see. So today we're going to talk about, um, the different scenarios related to what could happen today. Some stocks that we're going to be watching from today to Tuesday, essentially. And you guys know the drill. These Fed days come out on a Wednesday, and oftentimes it takes until about Tuesday, Wednesday of the following week to get the true trend. That is not always the case, but we generally want to watch for a few days before we get the true trend. We're going to talk about the Fed fade intraday trade. I know some of you guys are intraday traders as well. I intraday trade, even though my focus here is swing. We'll talk a little bit about that. And just real quick, how many of you guys do intraday trade here? You can just post it in the chat here. Just give me an idea if it's even worth talking about. And we've talked about this in the past, the Fed fade. So we'll try to get that done before the Fed decision is put out. Once the Fed decision's put out, there's not really much to do until Powell talks, and we'll be off by then. But what Powell talking is going to be important. So once Fed decision comes in, we'll do a couple of example option spreads. I know a lot of you guys are working on that, especially to help with leverage and some of these higher price stocks. And then some stocks that we have on watch. All right, looks like a number of you intraday trade as well. Okay, first of all, let's go over kind of the scenarios we're looking at with the Fed. It's pretty much given. We talked about this in yesterday's report as well. It's pretty much a given that there's going to be a rate cut in most likely 25 basis points. That's what the market's expecting. That's what has been priced into the market right now. The market's been essentially trading on the expectation that the rate cut is coming in. So that's almost a given, but nothing is 100% a given. And every once in a while, there's something that surprises. So now what we're going to be watching for on the decision is it 25 points? Do they go bigger and go 50 or 75 points? And this guy right here, Mirren, could be a big influence on that. We'll talk about that in a second. Do they really surprise and not cut rates, which does not seem likely? I think Powell's speech at Jackson Hole was the biggest indication that he's kind of going in line with the rate cut. So the expectation is a rate cut. If there is any deviation from that, we can get a move up or down. If it were bigger than that, we could get a big breakout. If it is a surprise the other way and they don't cut rates, we could get a big pullback, maybe even down all the way down here to the 50-day moving average. So we'll keep an eye on that. But honestly, that's not expected. That would be a really big surprise. So what we're moving on to is essentially the dot plot and Powell's speech. Now, one thing that's key is there is a new governor, Mirren, which Trump recently appointed. And of course, Trump appointed Mirren because Mirren is in line with what Trump wants. And that's not only rate cuts, but big rate cuts and quickly. So Mirren most likely is going to be pushing that. Sometimes once these guys get in, maybe they change their tune a little bit, but we're going to be waiting to see. This is, obviously Mirren's first Fed meeting. So we're going to be waiting to see a couple of things. And also remember, there are two Trump appointees from last time, and it was significant last time that they both dissented. And that is very rare. They wanted the rate cuts and they ended up dissenting. So there is a split with the board here of the Fed. And We'll see how that plays out. So the dot plot's going to be key. For those of you who don't know what the dot plot is, essentially taking each of the Fed heads and they indicate what they want in the future, and you'll see these little X boxes on rate cuts, rate hikes, and so on. And then they'll from those numbers they'll get an indication of, is a dot plot saying two more rate cuts, three more rate cuts, no rate cuts. And the expectation, it's going to be somewhere between two or three more rate cuts after this potential one. And remember, this is just an expectation of what the Fed heads think right now in the future. It very rarely ends up playing out with what this dot plot says, but it's giving an indication of what the Fed could do in the future. So the market's going to be watching the dot plot very closely. And then, of course, the biggest thing is going to be Powell's speech. And his speeches impact the market much more than the actual decisions do. So the market is expecting that rate cut already. So because of that expectation, the market's not likely to move a ton just because of the rate cut. They want to see what Powell has to say going forward. And for the first time in a while, he was in line with what the market wants, with what Trump wants. When he spoke at the Jackson Hole meeting, was it last month, where he was much more dovish than he has been in quite some time. So we'll see. If the market wants to see, does he continue that? If we get the rate cut combined with a good dot plot, and then which I think it probably I think probably with the now three Trump appointees, that the dot plot will look pretty good. But Powell's, and then combined with a dovish Powell speech, that would probably be very, very good for the market in the coming days. So we'll see how that plays out. That's what we're watching for right now, and if there are any deviations to this. So that's what we're looking at. And then this is not for now, but always remember, we don't get the details of what what went on behind closed doors when they're arguing all this stuff. But next month's minutes will give us an indication of that. So that's not something to consider now, but just remember, in October, the minutes will be released where we actually get to see kind of what went on behind closed doors. And every once in a while, that becomes very important as well. All right, so that's what we're looking for, in the coming couple of hours now, and we'll watch the Fed decision release, and then talk a little bit after that, and then we'll talk a little more in the chat once we see what Powell is saying. Now, for those of you who are intraday traders, and if you guys have any questions or commentary, something you want to add to what I've said here, you guys know this is for you guys as well. So post it in the chat here. And the only reason I mute you guys, instead of, it'd be great if we could all talk, but then I've tried it before. It ends up being like all of us talking over each other. So instead, we'll just use the chat here. So if you guys want to comment or ask questions, post them in the chat here. Now, the Fed fade trade, you guys, when we've done this before, those of you guys have seen this, you know this very well now. This is a very common phenomena in on these Fed decisions, and sometimes other types of big decisions that we're waiting for, to economics data, oil inventories every Wednesday. You often see this initial reaction to whatever the news is. Let's say it's a positive reaction, and then these are 1 minute, instead of daily candles, these are like 1 minute candles going up. You'll see a big move up, and then you will see a fade. And that all happens almost every time. And we watched this live. I don't know if it was last meeting or the meeting before, and it happened exactly as we laid it out. Let me get SPY on here on the minute chart. You can see we're already starting to pop a little bit going into the decision, which is in about 4 minutes now. But you'll often see this if it's a pop, and then you'll see a big drop right away. And then from there, we'll see consolidation, and that can last for a while. But at some point, wherever there was consolidation, if you get a break of that consolidation range, that's the way the market will often move going into the close, and you can day trade around these things. So keep that in mind. Now, I did it as if it popped. If it drops right away, then your fade would be playing a pop. So you'd be looking to go long here. And this is a very quick trade. You got to be on your toes. I'm not going to do it right now because we're all together talking. So it's going to be tough for me to really concentrate. But you have to be really watching this very closely, because these fades happen very quickly. And then again, you look for consolidation, and then where does the range break? So we'll be on the lookout for that in about 3 minutes. So while we're waiting for that, if you guys have, looks like I don't see any questions, but if you guys do have some questions or commentary, any of you guys who do intraday trade, do you guys ever do this around the Fed, and have you been successful with it with the Fed fade trade? You can do this with the Fed. Every Wednesday, oil inventories are released, and that it works well when there's a big move. Oftentimes, oil inventories are a dud, but when there's a big move in oil inventories, this trade works very well. And also just some of the economic data that we get throughout the day. You know, so you guys know some of the big ones: the retail numbers, consumer confidence, CPI and PPI type numbers, that type of thing. You can do that with those as well. But the Fed is the big one, and it feels like it works almost every time. All right, so Fed fade, and we've got the scenarios. What we're looking at with related to possible scenarios with the Fed. Some of the stocks that I'm watching for the coming days for potential entries. Now we already, if you guys are trading kind of in line with what I'm doing, and most of you have some positions on right now, you can see here we've got a number of positions already. Notice here it's very tech heavy right now. We've got three big techs, and then we'll call PLTR. It's almost big tech now. We'll call that mid cap, and then Roblox as well, which is more of the momentum type play. I've been waiting. I've liked housing a lot. Let's actually pull up ITB. And you can see here, ITB has been very strong. We called out the bottom formation and the continuation pattern. Now we've been getting a pullback. I think a lot of this pullback is related to waiting for the Fed, because obviously housing is very tied to interest rates in the Fed. So you can see we've had this pullback here in ITB from 117 down to 112. This is a really nice spot to be able to enter housing stocks, and almost all the housing stocks are doing something similar. Here's Toll Brothers, DHI. We see variations. Lennar. We see very VZH. We see very, oh, this one's a little different, but we see kind of very similar patterns here. So all of these guys have pulled back. I think waiting for the Fed, and if there's good news, I think these are going to continue off the bottom. Their continuation patterns off the bottom. So I would like to. I know we're trading nail as a position trade, which is more of a long-term trade. But for our short-term swings, I would like to get into something like Toll or Lennar or DHI. So those are high on the watch list. And RGTI, IONQ, QBTS, these quantum stocks, and some of the energy stocks too have been starting to move going into the meeting. And I think a lot of that is related to expectation that there's going to be a rate cut. And you know, these type of things require heavy research, and heavy research requires a lot of borrowing and investment. So when interest rates lower, it's very good for these types of companies that need research and investment. So these things also have been running, and I think if there's good news here, will continue to run. So these will be high on our list. Retail stocks as well. When interest rates lower, it's better for the consumer. So consumer spending ideally increases. So we've seen a pickup in some of these retail stocks that had pulled back quite a bit as well. So these are some of the stocks we're going to be watching going into the next couple of days here. Looks like there's initial pop. So I'm guessing the news, the decision is what was expected. Let me actually pull the news up here. Okay, Fed lowers rates quarter point, first cut since 2024. All right, so we have the decision, not much information outside of that. We'll see what is said about the dot plot. So no big surprise. So if we were looking at this, our first check is we have the quarter point cut, which was expected by the market. And look at that. For those of you, exactly what we talked about here. This is the Fed fade right here. Look at how much SPY pop. You could do this with SPY. You could do it with the big tech stocks. Anything that's moving in line with the market. You can see right away this thing popped from 859 all the way to 660. Not 850. What am I saying? 659 all the way up to 661, and then boom, hold back in here. So that's it right there. The Fed fade. You have to be very quick on it, which is why I didn't trade it right now because we're focused on other things. But remember, this works for. I watch this every Fed day. I watch oil inventories for this and any other economic news events. You see this quite often. Now you watch for the consolidation range, and if it breaks that range, again, oftentimes once you get that range break, you'll get that run going into the close. So we have the information on the cut. Let me just do some reading here. Wow, 11 to 1 vote. So remember, the Fed governors, there was a lot of indecision last time. And there was, it was it was really varied. Usually they're kind of together, but there was dissent. There were some people who did not want many who did not want rate cuts, some that did, some wanted minor, some wanted major. But this one, 11 to 1 vote, signaling less dissent than expected. So I think that's part of the reason for the big move here is looking at what the vote is. It wasn't like 7 to 5, 8 to 4. It was 11 to 1. And the only dissenting vote was Mirren, the new one, who if you when you see 11 to 1, you would think that means that they didn't want the rate cut. They voted against Mirren voted against it because he wanted a half point cut instead of a quarter point cut. So this is about as bullish as it gets in terms of a vote. So not only is it 11 to 1, but that one dissenter just wanted a bigger cut. It wasn't a no cut vote. Waller and Bowman, they've been very staunch at not raising the economy needs it. They both voted for the 25 basis cut. So I think Trump's badgering against them is working. In the post-meeting statement, the committee moderated, but it did mention job gains have slowed. Uh, so remember, 2 or 3 sessions ago, we talked about the competing interest between unemployment and the economy versus the need for rate cuts. And look, obviously, they're going towards rate cuts. Uncertainty about the economic outlook remains elevated. These are quotes from the release. The committee is attentive to risks to both sides of the dual mandate. Okay, the dot plot. The dot plot showed a wide level of disparity. The biggest one was Mirren, no surprise, wanting a total of 1.25 percentage votes, which would probably take 3 or 4 sessions of cuts. Nine of the 19 participants indicated just one more reduction this year, while 10 saw 2 reductions, indicating moves in October and December. And one official did not want any more cuts. The plot also indicates one cut in 2026. So that would mean 3 cuts. So remember, we were saying, is it going to be 2? Does the dot plot indicate 2 or 3? It is indicating 3. Again, that doesn't mean it's going to happen. It's just what the expectation right now is. Okay, so I think that's enough information for us until Powell now. So essentially here, the stuff we talked about. In terms of scenarios, we got to just recapping what we know so far. The scenario is a quarter point cut, which the market expected. New Governor Mirren wants big cuts, and that was indicated in the 1.25 percentage points, meaning at least 3 cuts. The dot plot indicated, was it going to indicate 2 or 3 more cuts? The dot plot indicates 3. The vote was very strong in favor of cuts. And now we're at Powell's speech. So if we're seeing why the market is moving like this intraday, we know why. Everything is in line and very dovish or bullish, however we want to say it. So now it's just Powell's speech. And we've seen this before where we get this kind of news and everyone's excited. And then Powell comes in and it just tanks after that. Thinking about what he said in Jackson Hole, probably that probably is not going to happen, but we'll see. So that's where we are right now. There's really nothing to think about related to this now until Powell speaks, and then we'll see. And then remember, we've seen this a million times by now, that oftentimes we get some kind of move today, and that would almost like the intraday fade we talked about. Then the following day, the market will completely reverse that. And then it takes a few days to really get the trend of the market. So be careful. I would advocate being, especially if you have positions on already, where you're gonna, if the market does go up, you're gonna profit from it anyway. Be cautious in adding positions. And remember, when I say cautious, that again, that does not mean don't add. That usually just means don't go nuts. Don't make your risk really high. Don't take a bunch of positions with big risk. But if there's a position or two you like and you can control your risk and your portfolio is within your risk parameters, you can add. Have a list of your go-to stocks right now. These are the ones that we're looking at right now, plus other stocks that we like from our Focus 40. You guys know what they are. But I'm really keyed into these right here. If I do add anything over the coming days, it will most likely be one of these here. Um, and looks like you guys don't have any comments or commentary so far. But if you guys have any stocks you're looking at right now that you think either you just like the setup or you think they could be impacted but what's going on right now with the rate cut, post it in here and we'll go over it. In the meantime, let's take a look at the runner short setup. Now, if you remember last week, or I, and some of you, you placed a trade with the runner short setup on GDX, and it did actually start to pull back here. And this is very common. I talked about it when I entered GDX, and we did that using dust. So you can, if your broker allows, you can short uh, the ETF. A lot of you have brokers that you can't, or sometimes they're just hard to borrow. But that's not a problem because you can just do the inverse ETF, go along the inverse ETF. So dust gives you double leverage, so it's even more volatile. But you just go long dust, and it's essentially doing the opposite of what X is doing. So your analysis will come on this. And I talked about this at this point, that when we entered, that we might get stopped out. It often happens with runner shorts that you take that initial trade as it's been going higher, it gives you a signal to potentially short, and then that fails, and then it goes higher, and that second shot is where often you will get the big pullback. So you get stuck, you get stopped out of GDX. I keep watching these things. So you can see here, it actually did start to pull back, and here was a kind of a bearish engulfing candle. But what I would really like to see with GDX right now is, let's say it has, and gold miners have been kind of weird. Sometimes when there's good economic news, they pop. Sometimes they drop. It seems like no rhyme or reason, and sometimes anti what you would think the economic news actually says for it. But we just care about what the price action is telling us. So let's say in the coming days, post a rate decision, this thing gets more and more extended. If this thing starts to run and it gets to 75, 76, 77, I will for sure consider taking a bearish position in this as well. And then there are a number of momentum stocks that are getting very extended right now. We did this last time. One easy way to find extended stocks is take one of your lists of good stocks, like here's Focus 40, and sort them by the biggest leaders. And oftentimes these are the ones that are very extended. And then look to see. We see that ALAB wide gap. This is a great stock. And again, we're not predicting a big breakdown, just that we could potentially make profit off a potential pullback before it makes its next run. And we talked about stochastics. You can see stochastics are still extended. We talked about the gap between moving average and price action. And notice here, these pullbacks often come when the gap gets really wide. And when it's tight, obviously, you don't want to be shorting at that point. So ALAB is another one here. Now, I wouldn't short it here, but if it gets more and more extended, and we're always looking extremes. Whenever I see these things, you'll always hear me say more and more extended. Not here, but if it gets higher and goes parabolic and then gives us a reversal candle, that would be a good spot. App, we were watching this last time we talked about this. App was on our radar as well. Look how wide that gap is getting. Stochastics extended here as well. In this one, if it ran here, this would give us a really good risk reward for a potential big drop in the stock. ELF is extended in terms of stochastics at 85, but the range was right here. So it's not really the way we look at it, not that extended, even though the technical indicator, that's why you can't rely on these technical indicators. You have to be able to piece it in with like the price action you're seeing. Is this really extended when it could find support right here in this range? It could find support in this range. So I would really want something like ELF to really run some more before I even consider it for a potential runner short. So keep that in mind. I've got a lot, since we talked about it, I've got a lot of questions about runner shorts. And if you guys have any questions about it, you can ask. Uh, Lance is asking, you may have talked about this, but with Hood pulling back, do you think it's a good entry right now? I do like stocks related to financials and capital markets. That's why on our list here, I have XLF and FAS, the ETFs. In terms of Hood, um, yeah, these are always tough when um, it's giving a bounce off the 90 EMA, but that 90 EMA is kind of high where it didn't test the bottom of the range or the 50-day moving average. So I would place it this way. You can enter here definitely and use a stop maybe a little loose below the 90 EMA. You may get stopped out. No one really knows what's going to happen here, right? But if it runs, I think it'll be that's the way you have to think about it. What kind of risk reward are you going to get? If this thing runs, it could be one of these kind of runs where it makes a big move and you get 3 to 1, 4 to 1, 5 to 1. And if you get stopped out, that's okay. Maybe it pulls back to the 50-day moving average and you could re-enter at that point. So I do like Hood here. All right. Doesn't look like you guys have a lot of questions. Um, I pretty much went over what I wanted to go over related to the Fed and the stocks we're watching. I think for the option spread doesn't really fit with what we're talking about today. So our next pop-up session, we're going to talk about we're going to review option spreads. We've talked about this a lot, so you can go back to the past ones as well. And then I want to hit some of you guys have emailed me or messaged me topics you guys want for pop-up sessions. And this one was really, we're watching the Fed live, so we didn't really get into it. But a couple of things that have been asked is to go over risk profiles more. So we will do that. And there was another topic that I'm going to touch on that my mind's blanking now on what it was, but I have another topic in play. But if you guys have anything you guys want to talk about in these group set pop-up sessions, let me know. Just message me in Discord or email me, and we'll talk about it. All right. So I'm going to get off now since there aren't too many more questions. And then, oh, looks like there's another one here. I'll get to that in 1 second. And then I'll be in the chat to discuss Powell's commentary when that starts up, and we'll talk about the close in the chat, and of course, then in tomorrow's report as well. Frex is asking, can we get your thoughts on the weekly 9 EMA? I usually a lot and find it very effective. So a lot of it depends on time frames. So if you are more position trading and your hold times tend to be longer, like maybe 1 to 6 months, then the 9 EMA is very effective. For the short-term trades, I don't use it as an entry trigger, but I do watch it because I know there can be movement, support, resistance around those levels. Here's the other thing you're going to find. The 9 EMA on the weekly corresponds very closely with the 50 on the daily. So you really kind of don't need to flip back and forth that much. So if we look at Hood on the weekly here, actually, I think because Hood has been so. Oh no, it's right. Yeah, you can see Hood's 9 EMA where is at is almost identical to where the 50-day moving average is on that stock. So here, and if we look at yeah, right at 107. So both of them are at 107. So Hood's 9 EMA is at about 107, and the 50-day moving average on the daily is at 107 as well. So basically, you're looking generally when you look at the 9 EMA on the weekly, you're essentially looking at the 50 on, not always the case, but generally you're looking at the 50 on the daily. All right, guys. That was interesting. I'm in terms of what the Fed, how the Fed decision played out. I wasn't expecting it to be that bullish or dovish. But again, we'll have to wait to see what Powell has to say now. All right, I'll see you guys in the chat in a few minutes here.